Hello everybody, my name is Anthony Dolezal with XG Trading. Today we're going to talk about trading news announcements and data releases in the futures market and how to be successful doing so. Alright everybody, now let's get our house cleaning out of the way and make the regulators happy. Today's video and webinar is intended for educational purposes only and is not intended as a solicitation to buy or sell any investment instruments. There's considerable risk involved in trading. Most of you probably already know this. So with that, let's move forward and get started. And I'm going to show you one of my absolute favorite trading strategies, and it's a great way to make money trading news announcements. Now, the first question is going to be, which announcements do you want to watch that are good for trading? Of course, the U.S. non-farm payroll, the jobs number, which is released the first Friday of every month. That is probably the biggest release that you're going to see. Any interest rate announcements, whether it's for the U.S., the ECB, the European Central Bank, the Royal Bank of Australia, Bank of Japan, Bank of Canada, Great Britain. Interest rate announcements are huge market movers, so you'll want to watch those. Advanced GDP numbers. You don't want the old GDP numbers that everyone kind of knows what's going to come out. You want the advanced ones because those are going to move the market more so. Last one to really keep an eye on is the retail sales releases. Now, before we go into the charts and learn my strategy, we need to look at what the definition of price is in order to get a real grasp for why my strategy works. Now, the price of any futures instrument at any given moment is the current value of that instrument plus or minus the market's expected value over a given amount of time. Makes sense, right? So right before any news or data is released, the market's expected future price is primed to change based on what's released and what comes out where the data is. I call the last price right before the release of that data the pre-release price, or PRP. So keep PRP in your mind for reference throughout this video. So here's an example. This is a chart of the S&P 500. What you're looking at here is the last 5-minute candle right before the jobs number comes out. And this is from a few months ago. And you can see the PRP zone is 2047.75 to 2046.25. Data comes out better than expected. Everybody's happy. The S&P rips higher by about 15 to 20 handles. So that's a big move. What you're watching at this point will be what happens from here on out. In this case, you can see the market consolidates, comes back down to that pre-release price zone, bounces off it. After a short bounce, it breaks through that zone, and I've circled the breakout. Once it breaks through that zone, that's when the reversal accelerates. So here's the basic premise behind it. Data comes out good, market goes higher, people get long. All of a sudden the market digests it and goes, yeah, we're not so sure that this is as good as we expected, and it comes down. A lot of new traders see better than expected numbers and get long and buy, and then they lose money and they're left wondering, well, why did that happen? It's because you can't outsmart the market. You want to watch real indicators of what's going on. When the market goes back down through that pre-release price right here, the people that were getting long on the release now are bailing out of their positions. So their sell stops are hitting the market. On top of that, other traders see what's going on with the reversal, so they're getting on board too. They're selling it. it accelerates the reversal as it goes lower. And you can see in this case, very quickly, once the S&P broke through that pre-release price, it moved about 14 handles or 56 ticks lower very fast. Even if you got half of that, 28 ticks, that's a great trade. That's a good day. If you get a quarter of it, 14 ticks, that's a good day. Now, here's another part. Just to show the importance of this PRP zone. You can see as the day went on, after the S&P made a low, it came back up towards the end of the day, maybe 45 minutes before the bell, came right into that PRP zone, and then sold off hard almost all the way down to the lows of the day into the close. This area is very important for price, for news releases, and watching it. So to recap, we want to find what the pre-release price or PRP is for the instrument that we're going to trade. Watch the market's initial reaction to the release, then be prepared for entry if the market starts to reverse. Then jump on board once the market breaks back through that PRP to get on the reversal as it accelerates. And the last but most important piece, manage your trade effectively. Devise your plan, stick with your plan, manage your trade effectively. If you want to learn more and watch some more of my videos, again, my name is Anthony Dolezal with XG Trading. Please go to our website, xg-trading.com. You can see it there in the upper left-hand corner. Again, that is xg-trading.com. Thanks for your time, and I hope you all have a great day.